I get these common home financing questions all the time, and I know just the person to call. Let me call Scott Rutter.
Kristen, what's up? I'll be there in just a second.
So Scott, if folks are considering buying a house when they already own one, what should their first step be?
To go through the pre-approval process. That way we can determine if they're contingent. What I mean by contingent is that of having to sell their house in order to qualify to buy a new house. Or in many cases, what we find is clients are able to buy without having to sell and list their house on the market first.
Okay, perfect. That's very helpful. Now, can folks use the equity that they currently have in the home that they own to buy a new one?
They absolutely can. There's a couple of different verticals they can take. They can do a home equity line of credit. However, if they're going to go with a home equity line of credit, it's essential that we get that in place before we think about listing the house, as otherwise a home equity line is not available. They can also alternatively do a home equity loan or also a bridge loan.
Okay, awesome. And if you guys are curious about each of those different loan terms, I have a separate video linked here as well that you can check out. All right, now Scott, everyone wants to know interest rates. Should we be hyperfixated on it or what?
100% not. First of all, what people have to realize is when they see advertised interest rates, it's all smoke and mirrors, fake news. Anybody can have any interest rate they want, but do they want to truly buy down the rate? And my recommendation is absolutely not. Let's think about it. Rates come down to a few main things. What's your credit score? What loan type? What loan term? How much money you're putting down? And what the purchase price is, as well as primary, second, investment. But again, circling back to why it's not important is no matter what loan any client goes with right now, they're going to refinance. It's just the market condition we're in today. The market volatility. So what I say is marry the house, date the rate, get the house now, because those first-time home buyers especially that think, hey, I'm going to time the market perfect and wait till rates drop down to say 5, 4, whatever their hope is. Once they do that, that's where all the investors come from the sidelines, and then they're competing against cash offers. So now they're paying $50,000 to $100,000 more for a house that they could have had today, whereas they should have taken the L, should have taken it on the chin a little bit, knowing that 12 to 24 months later, they're going to be able to get into a more affordable payment.
And especially with the market where we're seeing it right now, that homes are sitting a little bit longer. There's a little bit more opportunities for buyers right now.
100%.
If they can take on that, possibly get a better deal on the house now, rather than wait for higher competition and maybe a lower rate, they might be in a little bit more of a stressful situation at that point. That's a great answer. So Scott, what is your take on renting someone's current residence and buying a new one?
Kristen, that could be a fantastic option. Actually, I find a lot of my clients doing that right now, especially when they're locked into such a low interest rate of 2%, 3%. As far as mortgage qualification goes, where it can be a fantastic solution is we don't have to count that mortgage payment against them. We're actually able to credit them for that of what they're able to rent the house for. So again, it has no hindrance on them buying another house. The other thing is by keeping the house, it builds generational wealth. Also, as we know, the triangle is such a growing, happening market that value is going to continue to rise. So I think it's great.
Okay, so that's a great option. So folks can actually not have the impact of their first mortgage really relay too heavily on their next mortgage.
That's correct. Yep,
okay.
Absolutely.
Perfect. And if any of you folks have some additional questions for Scott, you can find his information down below. You can book a free consultation for a 30-minute call with Scott, where he'll answer any and all of your financing questions. I look forward to seeing you all in my next video, and yeah. Deuces. Oh my God.
That's the outro.